All right, so this is the day three of this particular teaching, and we have talked about the basic elements to a trade setup. I've talked about market structure based on the institutional level, and this particular video will be talking about liquidity. All right, so liquidity is something that is one of the frameworks by which the market operates on, right? So, as an institutional minded trader or a smart money minded trader, there is no way that you can trade without understanding liquidity. Liquidity is something that if you don't understand it, then you're going to really miss a whole lot because it's like one big piece of the puzzle, right? For me, I feel that the trading puzzle is divided into four. Right, the first part we have the psychological aspects. The second part we have liquidity. The third part we have technical analysis, and the other part we have risk management. Right. So I think that's the four things that really make up the trading. Right, just my opinion. Right, so it's not really that important. So we have to talk about liquidity in details in this call. We have to understand what liquidity is all about and how you should view it as a smart money minded trader. Right. So now when we talk about liquidity, we're referring to this. Right. So we're not going to be defining liquidity based on the Google definition, right? This is the institutional framework, right? We're going to talk based on the institutional perspective, how an institutional trader or a smart money trader views liquidity, right? What is that liquidity as a smart money minded trader, right? So liquidity for the smart money minded folks or from the smart money minded individual is seen as the probable areas where the retail minded traders would likely put in their buy or sell orders. Right. So as a smart money trader, you're looking at those points in the market where the smart money or sorry, the retail minded folks will likely put in their order. And I usually say if you can't see the liquidity, then you are the liquidity. Right. So as a smart money minded trader, you are interested in spotting liquidity because it's going to inform your decision, right? So you don't want to be caught off guard. You want to know where those retail minded folks will likely put in their buy or their sell orders, where they'll likely put in their stop or limits, where they'll likely put their protective stop loss and all of that, so they break even, all those fun stuff, right? So now these orders may be a form of limit. It could be a buy limit, a sell limit, a buy stop, a sell stop, and then their stop loss or break even. Right. So protected stop loss refers to either their stop loss or their break even because it's still a stop loss used for break even. All right. So that's why we want to identify where the retail folks will likely put in their orders or wherever they likely execute, and then you want to use that to your advantage because the market is liquidity based, right? I believe and I say this all the time, that I believe that the markets are liquidity engineered, right? So the retail minded traders usually use trading chart patterns and other retail concepts like indicators to determine where the order should be, right? If you are in the retail space, you know that you use trading chart patterns a lot, double top, wedge, cup and handle, flag patterns, all those things. Those are what basically the trading chart artist is doing, right? And most of these things have no sound logic attached to them, right? So most times this decision is not based on sound logic when you view from the market maker perspective. So you see a rotator that just draw a line and then he wants to get short because the market has rejected from that line. Maybe you just mark at the level and it's like, okay, the market has played off this level before. Okay, let me take a trade off it. And most times this there's no sound logic apart from all these chart patterns, right? Or sometimes he sees indicator just cross, right? So indicator has crossed, okay, why are you buying? Because indicator has crossed. No fundamental analysis, nothing again apart from the indicator cross. So basically they use chart patterns or indicators to determine where to get in, where to get out, for all those things, right? So now there are various kinds of liquidity, most of which are pure chart patterns, and few of them are time-based. All right, so we're going to be talking about the chart pattern-based liquidity. All right, the chart pattern-based liquidity referring to the ones that are in form of the chart pattern, right? Talking about double or equal tops and bottoms. We're talking about triple tops and bottoms. We're talking about trend lines. We're talking about bullish or bearish flag patterns. We're talking about wedges and triangle patterns. No, ascending triangle, all those stuff. talking about old highs and lows. These are what the retail chart artist is using to determine his trade. It's using double top, it's using triple top, it's using trend lines, it's using bullish or bearish flag, it's using wedges, it's using triangle patterns, all those fun stuffs, what they use. And I fell victim to this. All right, these things, I'm not saying that they are 100% wrong. They work when there's logic behind it. But without logic behind it, then it's going to go to hell. Or it's going to go to what? Yeah, hell. Right? No matter what you see, double top, triple bottom, if there's no sound logic attached to it, which is the purpose of this code, to give you guys the missing piece of this puzzle. So if you're using this pattern, I'm not saying that you're a bad trader. I'm only saying that there's no logic attached to it. That's why this call is being held, or this live training is being held, to give you what that's missing link, right? So now we have time-based liquidity. And there are the various kind of liquidity, most of which are pure um, time-based pattern, right? When we talk about time-based liquidity, we're referring to Asian highs and Asian lows. And Asian high and Asian low is time-based because there's a particular timing in which it forms. It forms between 7 p.m. to 12 a.m. New York time. So we're talking about that when we go to recharts. So you don't simply go to your recharts and you look at 7 p.m. to 12 a.m. That is where the time-based liquidity based on Asian high forms and Asian low forms, right? Then the previous session high low, when we enter into the London session, automatically Asians highs and lows become what liquidity. If you enter into the New York session, automatically London high and lows become liquidity. When you enter into Asia, automatically New York high and low become liquidity, right? So what I'm saying, when you enter a new session, the highs and lows formed in the previous session it becomes liquidity. And note, when you're talking about previous session high and low, you're not referring to the highest point and lowest point because a London session can make like two different lows, like make the first one and then make a second one, right? So those both of them are still what previous session liquidity. It must not be like this, the highest one and the lowest one, right? So any high or any low formed during a session and then will enter into a new one, that set one can be seen as liquidity. It happens a lot where you see New York go and take out London high or London low and then reverse and then move. Then for previous daily high and low, it's mostly used for targeting. If this one is mostly used for profit targeting. So if you're bullish, you want to buy into a previous daily high, and if you're bearish, you want to buy what the previous daily low, right? So we use this for profit targeting, right? Or want to expect reversals. For instance, now if maybe you enter into a new day and you see that the London session just took out the previous daily high. So most likely you might anticipate maybe a reversal during the New York because the previous daily high has been taken out. So it's time based. So you look at the highs and lows formed in the previous day, that gives you what an idea of what to expect. All right. And then the previous weekly and monthly high and low. These are also liquidity areas because that is where the market is drawn to. They're time based because when you enter into a new month, the high and low is formed and you see all these things as we go into recharts examples, right? So now as is what to do with this information. As a smart money or institutional minded trader, we use this information to know the trade setups to avoid. That means when I see something like a double top, I'm staying out of it. When I see something like a trend line, I stay out of it, right? I'm not trying to trade based on pure chart patterns, right? I want to have logic attached. I want to have the smart money backup attached. It's like if you have seen a cow and there's a particular bed that perches on the cow, right? So that bed is you're like that bed, right? You want to be on the top of the cow, so the cow can take you where it's going. Imagine the bird is trying to fly against the cow, it's going to get killed, right? So you want to be as a smart money trader, you want to be um taking your trades based on where smart money is going. Smart money is going to the left, you want to feed them to the left. All right, so you want to be in line because the smart money traders usually go after the retail traders, right? The big deep pockets usually trade against the retail traders. So you don't want to be using retail traders chart patterns that have no logic attached to them to take your trades, right? So you want to have that logic, and logic simply refers to reason, right? So you want to have a reason based on the institutional level to take your trades, and you should be avoiding the ones that don't have any reason apart from chart patterns, right? Then you should use it for profit targeting. So if you're maybe a bullish, you want to be targeting those areas where the retail traders want to likely get involved. Like for me, I like targeting equal highs and lows for my take profits, or I've used trend lines on my take profits, right? Or I will use a flag for my take profit. So I use it for profit targets. I use previous daily high Asian high, all those stuff might take for that. And then I use it for framing trade setups. So I'll talk more in detail as we continue. Right. So now, a lot of this have been deeply discussed in the paid mentorship platform, right? I know some of you guys, because you have attended this training, you think that okay, you have gotten the holy grail. No, because I am. You can see how much we listed in the previous. You can see. Let's go back a bit. So you can see how much we listed there. So you can see that I won't be able to touch each and every one of them because each of these things have specific rules, specific approaches to approach them, right? So it's not something I can discuss all in this particular module, right? So you have to understand that we cannot discuss everything in like it's going to take a lot of time. We have only 6 days of this course, so I'll just be touching through it. For those of you that are reading the paid mentorship platform, this will kind of open your eyes and give you a better understanding. For those of you that are not in it, this will kind of stir the waters for you, right? And when the waters are stirred, the next thing you should do is to join us so that you can have the full and in-depth information, right? So it's not wise that you just take this information just at the surface level and just go and start reading, right? You have to come to the pay group where we break it down better for you, right? So I want you guys, if you're not part of the paid mentorship group, it's not quite expensive. Just join us for 1 year. We have our subscription is yearly. Just join us so that you can have this thing, you can understand it properly, right? I've seen some of you asking some questions like force viewers. All those things have been discussed properly in the paid mentorship group. So if you can do yourself the favor to join us so that you can understand it properly, right? Because I cannot start teaching everything in 6 days. Our paid group have been there for 2 years now, right? So I cannot be discussing what I've been talking about for 2 years in just 6 days, right? So that's why you need to join us. If you haven't, just send me a DM and I will give you the information to join us, right? It just goes for about $60 for 1 year and about $60 for just one full year. All right, so I think we can go to real charts right now, right? All right, so we're back to real charts now, and want to look at these things from the real chart, all right? So now, um, I want to be starting with the Asian liquidity, right? I've already done a video on this, right? I've already done a video on this. It's actually in my your free YouTube channel, right? And I've also talked about it in the pay mentorship group, right? So come out and watch the video where I talk about Asian liquidity. I'll be posting the link in the comment section, right? I'm posting the link for that in the comment section. But I want to talk about it a bit. So I use an indicator for checking Asian liquidity, right? So this is the indicator, right? So when I mean indicator, I don't mean indicator like the one you know, right? So I'm not talking about 93 courses. It just helps you to show me where Asian liquidity is because it's time based. So it's really stressful to really look for the high and low between the time period, right? So this is my chart now. So if you open it, you can see what it looks like. It shows me the liquidity between Asian high and Asian low. This is the name Q zone. It looks like this. So you can also simply come to indicator. So it's indicator, indicators. Then you click. This is it by Rick Traders. Click on Asian range and Q zone by Rick Traders. Right. This is the one I used for that. I use this um for marking it out, right? So I use. All right. So it has to show me where so when you install it, it's still going to settings and make sure everything is intact. Make sure that the Asian liquidity is at 7 to this, so it will not be making it. So make sure the Asian session is set at 7 o'clock to 12, so it will be accurate. All right. So you can see. All right, so it also shows me Q zones, right? So this is what I'm talking about. You can see Asian liquidity. It shows you the high and the low. So if you're bullish, typically you want price to go below the Asian liquidity, and then you want to buy below it, right? And then target Asian high. So what do I mean? If you're bullish, typically you want to be buy. You want price to go below the Asian low. I'll tell you guys why when we talk about tomorrow's call. Tomorrow call is titled time and price. So I'm talking about why this is it. I want to give you guys a crude depiction, right? Now, when the market is bullish, it tends to go below Asian low before going what higher. So higher is how we usually trade on the drum session. So you want to see price go below that Asian. Remember that Asian usually have what consolidation. Markets usually consolidate Asia. So you want to see price go below it before you then look forward buy. What happened in the market when we do it before they want to buy? And where did they buy it? So we had Asian high, this high, this previous high is forming here. And this high was formed during the previous day because from here, 12 o'clock is the new day. So I had this previous daily high here. We had Asian liquidity here. So markets went below it and then gave us a better opportunity to do what? Take out this previous daily high. All right, so previous daily highs are their time based. Right, that's always also mark. So when you enter a new day, always mark the high formed in the previous day because you can see how price smashed it very cleanly. All right, so another example here, you can see how the same thing occurring here. What do you have? One market wanted to buy. What happened? The market first of all went below Asian liquidity, and then what did he do? It went below Asian liquidity, what he bought and took out it, and then finally what went higher. Look at this one again. Although this not look at this one, the market wanted to sell once above Asian liquidity and what is now sold. So it's really very beautiful if you understand this things based on time. So there's a video I made on Asian liquidity. You can go out to watch it. It explains Asian liquidity in details, like in pure details. All right, so I can't go over that again. So just watch the video and post in the comment section for Asian liquidity. Now let's talk about other kinds of liquidity. We talk about equal highs and lows. You can see that is usually something that usually gets very clapped. All right, market always goes for it. You can see this one here. You can see relatively equal highs here. Market created some kind of resistance level here. Can you see this? The market came. What happened? The market what? They did set off. You can see the market played the game here. The market was bullish, and now it came to this equal high and then retraced. So if you are a smart trader, you know that this is actually a target. So you can see an order block. What can you see? You can see what the market consolidates. You can see an expansion. So you can see there was an order block created there and an imbalance inside there. So this would have been a very beautiful buy to buy where to what this liquidity. So as a smart minded trader, you're looking to what to buy into liquidity, not sell from liquidity. Right. So for me, I'm going to do what I will see this as a target. I'm going to what to buy into it. So this is beautiful. When I'll talk about time and price tomorrow, so you guys can understand how to use this when to look at opportunity. Look at another one here. You can see how there was actually was. What can you see here? Support, right? So resistance level, right? What happened there? Why resistance level? That is not giving me what I want. You can see this. You can look at this. You can see this equal highs there. What happened? The market came below it. It hit, took out this liquidity, and then what happened? Market went for the high. All right, you can see how this is span out. And you can see if you extend that in time, you can see that was actually a very good uh, quote unquote strong support or resistance level. You can see how smashed it. All right, that is why I don't respect all this. Look at this one. We had equal lows here. What happened? Market was smashed through before they went buy. So that is something you need to understand, right? Look at that one here. Have equal highs here. The market was it smashed through before they were selling. So that is how the market is. The market does not respect all those patterns. It does not respect them. Right? It only uses to build up liquidity for a future. Look at this. As soon as you took trend, you trade trend lines. Right? Look at the trend line now. But it's just see how beautiful this happened. Look at this. So you have been like, okay, let me buy this trend line, right? And then the funny part, it would have given you what a kind of trick, right? The market would have tricked you to think that it's going to buy, right? You can see how this is at play now. So you can see they will say first touch, second touch, and then what happened? The third touch really did well and took you out, right? So this is how the market really works. So if you trade ascending triangle, that is the same thing. Look at and see something like a triangle here. You say okay, break up, break up, break up. Look at triangle. What happened? So the market will this is the so the market will do what anticipates. Market was went against everyone else, right? That is the same thing that it happens on repeats. It happens on repeats. Look at the flag now. Look at people that trade flags. Let me show you something here. This is something you have to understand. Look at flag here. We had this is actually the pool. Flag has the pool and the flag itself, right? So we had the pool here. Had the pool. This is the pool of the flag, right? Then you can see that there was actually a flag pattern forming, a bullish flag. Right? You can see this bullish flag, this slanting, it usually goes up and come down a bit, and then they say, okay, flag pole to the flag pole should have equal distance. That's what they think. Right? The retail manager does, they think that okay, if the market is creating a flag, they'll say, okay, the market flag, this is the pool, this is the flag, and then the market should move the same distance. So that's what they usually have in mind. The market makes it a pool and then makes a flag. The market should move equal distance of the flag. That's what I was taught when I was learning flag patterns. But you can see that's not happened there. The market made its pool, made its flag, and then what happened? Did he buy? No. It was reverse. It was went against everyone trying to buy what this flag, right? So this is something that you should understand that all these patterns they don't operate unless they have logic attached. So trading just based on chart patterns is one of the wrongest things you can be doing. And look at this one. Look at all these lows there. That's what the market did. Took it out. So you can see how this is happening on repeat. It keeps happening. It keeps happening. It keeps happening. Right? Some people have been okay. This is strong support because why the market bought from here. What happened? The market buy again. No, it just stored there. If you saw this engulfing candle, some plans candles can also be a chart pattern. They'll be like okay. They'll be like okay support level. Right? They'll be like okay we are in that support level. Right? Support level have an engulfing candle. What happened? Market instead of the market to engulf and play out, it only engulfed your stop loss, right? This is something you need to understand, right? This is something you need to understand. I cut my teeth on this market, right? I really cut my teeth on this financial market, right? So I know all these patterns, like I studied them, I used them. This was one example where double bottom held, all right? And you can see, all right, you can see how these things are always violated, right? Always violated. Look at this one. Look at this support level. Market took it out. You can see how these things are always violated. Look at this one. Support level took it out. Resistance level took it out. Everything that it's just been taken out because why? There's no logic attached to it. Right? Look at another one. Support level. What happened? Support level. That's if it wants to buy. It would have been okay. Strong support. It'd be like okay, 1, 2, 3, 4 touch. What happened? Market what? It took them out. So someone like me, I'll be trying to do what? I will stay out of it. This is about buying what one market takes out the low. So when we talk about time and price tomorrow, we'll be understanding this thing better. Right? Because I'll be teaching you guys how to apply this things, right? This is just for you guys to identify it, just to identify it on your chart, right? Just for identification purposes. But in tomorrow's call, we're talking about time and price, and to giving you what and what you should be looking at from what you should be paid. All right. So I think we should wrap up this call here. So we'll continue tomorrow. Yeah, with God willing, I see you in the next video.